Hello and welcome to Nutmeg's Investor Update for November. I'm Nicola Rowledge, the leader of people here at Nutmeg, and I'm here with our Chief Investment Officer, Shaun Port. Hi, Shaun.
Hi, Nicola.
Shaun, can you tell us a bit about what's been going on in the markets?
Well, Nicola, it was another busy month for global financial markets, and often we talk about what's going on in the world. Perhaps let's talk about what's been going on here in the UK. Bank of England has been signalling for some time that interest rates are going to go up, and in November the Bank of England hiked interest rates. That was fully expected, but actually at the same time the bank really talked down the strength of the UK economy, talking about weaker business confidence largely due to Brexit. And that has actually pushed the value of the pound down and has helped UK equity markets perform really well. So quite an unusual performance coming from the UK stock market. Now, away from the UK, a lot of political news. So Prime Minister Abe in Japan was re-elected, which has been good for Japanese stocks. And in the US, the House of Representatives are pushing to get tax cuts in before the end of the year. So it's a quite interesting news going on in the political side. On the negative side, on politics, in Spain, in Catalonia, they voted in an unofficial referendum for independence, which has really hit Spanish equity prices. But generally, European political risk has started to come back on the agenda.
Thanks, Shaun. And given those political changes and the market changes, how have the Nutmeg fully managed portfolios performed?
Actually, equity markets have had a really good month. So we've seen Japanese equities, emerging market equities and US equities doing really well. Where we have lots of exposure at the moment is in those regions, so in emerging markets in Japan, and we've actually seen a really strong performance. So in October, our highest risk portfolios delivered up to 3%, which is a really good, strong month. Our medium risk portfolios delivered around 1.5%, and our lowest risk portfolios made small gains. So actually it was a really strong month for performance for our portfolios.
And so what changes have we made, if any?
We actually haven't made any changes to portfolios. We've got higher than normal exposure to Japanese and emerging market stocks. We're really happy with those holdings in portfolios. Of course, we're managing and looking at those risks, but at the moment, we're keeping portfolios as is.
That's really insightful, Shaun. Thank you. So we've now got a customer question, and this month's customer question comes from David O'Reilly on Facebook. So David asked a number of questions. So the first part is, if Brexit leads to a downturn in the UK economy, how exposed are Nutmeg's portfolios to losses?
Well, to begin with, it's really important to state that we are global investors. We look for opportunities around the world rather than just thinking about in the UK. So, for instance, as you know, we invest in emerging markets and Japanese equities, but also we invest in US government bonds rather than just in UK government bonds here. So we are global investors, and that's really, really important. At the moment, we have lower exposures to both UK equities and UK government bonds than we would normally do, and that's really around concerns about Brexit. And also we take into consideration the pound. Whether we get a strong or a hard Brexit, the pound will really move on that factor.
And following on from that, how much do you think these fears are priced into the markets, David asks? And does this create buying opportunities if the fears are, say, overdone?
So a really good question, quite a complex one. Actually, if you look at what the Bank of England are already saying about the UK economy, they're saying the UK economy is going to be quite a lot weaker because of Brexit concerns. To a degree, that's already factored in the way people think about UK stocks, and particularly the way that international investors think about whether they invest in the UK or not. But actually, you need to think about the UK market as being a global market. More than 70% of earnings come from overseas. And actually, if we get towards a weaker UK economy, particularly a harder Brexit, the pound would fall and actually boost those earnings. So the UK stock market, perversely, could do quite well in that circumstance.
Okay, great. Thanks, Shaun.
Thank you, Nicola.
And thank you for joining us. And if you, like David, have questions for Shaun, then please contact us through email, social, or the comments below. See you next month.